Kenya $300 million China Panda Bond. What means for Kenya debt? Kenya is preparing to explore a new source of international financing as the government looks for a way to manage rising debt repayment and finance its budget. The Kenya Treasury is considering issuing the first ever Panda Bond in China's domestic financial market, with proposed value of approximately 300 million USA dollars. But what exactly is Panda Bond? Why are they looking China's financial market? And the most importantly, could this new borrowing strategy help Kenya reduce debt pressure? Could it create another financial obligation for the country? Today, East Africa Business Report, we take a closer look at the Kenya proposed 300 million Panda Bond country-wide borrowing plans and what moves could mean for Kenya economy. What's Panda Bond? First, let's understand what Panda Bond actually means. Panda Bond is issued to China's domestic financial market by foreign government, company, or financial institution. The bond is generally demonstrated in China currency, renminbi or yuan. Simple term, Kenya would borrow money from investors in China financial market and still relying on international market. It does mean China government is simply giving $300 million, and instead Kenya could issue debt securities to investors. Those investors could provide funds. Kenya would then have repay borrowed money according to the terms of bond, including interest. Kenya would therefore opening another door to international investors. Kenya 300 million plans. According to the Kenya latest borrowing plan, government will explore issuing inaugural Panda Bond with approximately $300 million during 2027 financial year. However, this is still a proposal. The Kenya government has not yet completed the issuance. The plan requires necessary legal and regulatory approval. The announcement comes as Kenya is searching for additional sources of financing at the time when public debt repayment are putting significant pressure on the country's budget. Treasury therefore looking beyond one of single source of borrowing. Alongside the proposed Panda Bond, Kenya is considering several other financial instruments, including summary bond in Japan, Sukuk financing, diaspora bond, and other market-based financing options. The government also plans $815 million Eurobond issuing during the second quarter of 2027 up to 2027 financial year. Why does the Kenya need more financing? Why does the Kenya need more financing? The biggest issue behind Panda Bond is Kenya growing financial needs. Kenya has significant government debt and face large repayment coming year. This means the government needs to build to finance more, not only for finance development program, annual budget, but also manage existing debt obligations. For the 2026 up to 2027 financial year, Kenya has set a budget deficit target for approximately 5.5% of GDP. The government expects a part of this gap to cover through external financing. The Treasury borrowing plan identified approximately 247.2 billion Kenya shillings, equivalent to about 1.9 billion in net external financing. The remaining financing requirement is expected to come from domestic borrowing. This explains why Kenya is searching for alternative international capital markets. Why China? One of the major reasons Kenya may be interested in China financial market is diversification. For many years, countries such as Kenya have relied heavily on international market development institutions, domestic banks to finance the government programs. By entering China bond market, the Kenya could gain access to different group of investors. It would also diversify the currency in which Kenya borrows. Traditional international borrowing is often linked to currencies such as USA dollar or euro. A Panda Bond is generally denominated in China yuan. That creates both opportunity and risk. If Kenya can obtain favorable financial terms, new market could provide another option for raising money. If the Kenya shilling weakness against the yuan, the repayment cost became more complicated. Therefore, the success of strategy will depend heavily on the interest rate, maturity period, currency arrangement, and broader market conditions. Is this a new relation between the Kenya and China? Not exactly. Kenya and China already have significant economic and financial ties. China had been involved in a major infrastructure project in Kenya, including standard gauge railway. Kenya also previously explored Panda Bond financing. However, let us propose a different in an important way. The currency treasury plan for approximately $300 million inaugural Panda Bond, rather than simply announcing a China government loan. This means that Kenya could attempt to access China domestic capital market and attracting China's market investors. Other African institutions have already used this market. For example, Africa Export Import Banks, Afrimix Bank raised about $300 million through First China's Panda Bond 2025, showing that African institutions can create this market. This experience could provide useful lesson for Kenya. Could the Panda Bond help the Kenya reduce the debt pressure? This is the most important question. At the first glance, borrowing money may appear to make Kenyan debt problem worse. Then there is some of truth to that. A new bond creates another liability that must eventually be repaid. However, the Kenya government's broader strategy is not simple about borrowing more. The treasury says it also wants to retire at least $500 million for expensive external debt during the financial year. The objective to reduce debt servicing costs and improving sustainability of government and finance. This distinction is important. If the Kenya replacing expensive debt with financing that at better terms, the country could potentially reduce cost of servicing debt. But a new borrowing expensive fund are you cover recurrent budget without improving current productivity, debt burden could continue to grow. The biggest benefit, diversification. One of potential advantage of Panda Bonda is diversification. Kenya would have to depend entirely on the international market. Country already exploring several different financing instruments, including Panda Bond in China, Samaria Bond in Japan, Eurobond, Sukuk, Diaspora Bond, development financing, funding, domestic borrowing. This approach spread Kenya financing across different market and investor groups. For countries facing large financing requirement, diversification can be useful. If one of the market became too expensive or difficult to access, another market may be provide alternatives. But there are also risks. Panda Bond does not eliminate Kenya debt problem. It simply provides another potential source of financing. One major risk is currency risk. If the bond is denominated in yuan and the Kenyan shilling lose value against the China currency, Kenya could face high costs when converting funds for repayment. Another issue is interest rate. The government would need to ensure that the cost of Panda bond is competitive compared with the other financing options. There is another broad issue in debt sustainability. Kenya must make sure that the new borrowing is direct toward the productive investment and carefully manage public finance. Otherwise, additional borrowing could increase future repayment pressure. What about Kenya's another borrowing plans? Panda Bonda is only one part of Kenya's larger financing strategy. Treasury plan to explore $815 million Eurobond during the second quarter of 2027 up to 2027 financial year. The Kenya also looking more than $500 million in borrowing from Japan market, including potential Samurai bond. The country will also pursuing the proposed $1 billion debt for food security swap with USA international loan financing operations. Additional external financing expected from institutions including World Bank and Africa Development Bank, as well as Italian government. This shows that the Kenya is trying to create broad financial strategy rather than relying on single source of money. What does this mean for the Kenyan's taxpayers? For ordinary Kenyans, the most important question is simple. Will this borrowing improve the economy? If the fund help financing product project, infrastructure, trade, agriculture, energy, other investment that generate economic activity, and the government revenue, the borrowing could potentially support future growth. But if borrowing continue to rise without a corresponding increasing in government revenue, economic productivity, taxpayer could eventually face great pressure. The government debt ultimately has to serve through public investment and other government resources. That's why the cost of borrowing matters just as much as amount of borrowed. What does it mean for East Africa? Kenya move could also have implications beyond this border. Kenya, one of the East Africa's largest economy and an important financial center. If the country successfully enter China domestic bond market, other Africa and the East Africa government could examine the same option. Successfully, Panda Bond could therefore encourage great financial links between Africa, government, and China's capital market. It also contribute to diversification of funding sources available to the developing economy. But other countries will also need to consider the same question Kenya face. How much should they borrow? At what interest rate? In which currency? For how long? And importantly, what will borrow money be used for? Final analysis. Kenya proposal and propaganda was not simply about getting money from China. It represents broader attempt by Kenya's government to diversify its financing source and access new international investors. The move comes difficult time with the Kenya facing substantial debt repayment and significant budget deficit. The government says we wanted to combine new financing with effort to entirely expensive debt and reduce debt service costs. That could be positive if they secure favorable terms and use of financing carefully. However, borrowing is still borrowing. Panda bond is not solve the Kenya debt challenge by itself. Long-term outcome will be depend on the cost of bond, currency movement, how money used, government revenue collection, and Kenya ability to control future borrowing. For now, Kenya key point is Kenya considering not yet issuing 300 million pound bond and propose still require necessary approval. As a Kenya is searching for new source of capital, investors citizens will be watching closely to whether this strategy can lower financing costs while supporting economic growth. What do you think? Could China Panda Bond market help Kenya manage debt? Or could it create another financial burden for taxpayer? Share your option in this comment. For East Africa business, finance, investment, economic news, subscribe the channel and turn to notification. Thank you for watching. This is East Africa Business Update.